Is there a safe haven from this credit crunch 2.0 that's evidently rearing its ugly head? Well, I think what we need to be asking is, what is the Fed going to do to stop this inflation? This could have a massive effect on cryptocurrencies, Zioncoins, XLM, XRP, Bitcoin. Most of these coins have seen a big run up. They've seen their bull market, but other coins, they've not really had new all-time highs. So for me, I wonder if that's got something to do with it. I wonder if that's going to play a part, if they are going to play a part in our new financial system. If things hit the fan, the SHIT hits the fan, are cryptos going to be playing a major part? Cryptos that have utility, high-speed cryptos that can move value from A to B in seconds. Is that going to play a part? Are they going to play a part? And for the most point, what is the Fed going to do? If the Fed starts buying up the debt, the Fed starts buying up these bonds, there's just going to be a massive sell-off, isn't there? It's that teeter-totter. And, the Fed they've got to deal with, what the base rate's going to be. What's the interest rate going to be, So we'll find that out tomorrow. But, really, when you talk about the rate hikes, it's likely that there's going to be like a 0.5 rise or 0.75, rate hike, and really, with the way things are in the markets, stock markets aren't going to see new highs. It's not likely they're going to be seeing new highs. There's just no room. There's not really anywhere the Fed can move, as it were. If they print money, it's a problem. If they raise interest rates, it's a problem. So they're pinned in the corner. And whatever they do is going to cause a massive problem. It's something that's just going to give. Something's going to implode. Look, we've got cryptos down at the moment. Precious metals are down. Gold and silver are down. You'd like to think that those things are going to be safe havens, right? When we have this massive recession, when we have these credit crunches, but we haven't seen it yet. The S&P isn't down 80% yet. Cryptos, the major runners, Bitcoin, Ethereum, they're not actually down 80% yet. They're likely to go, as low as 80-90%. But in that space of time, over the next couple of months, do they reach a floor and then shoot back up again? Because of what's happening in the debt market. Could we still see cryptocurrencies as a safe haven? Where is the value going to move from? I mean, we know the S&P's in a bear market. We don't know if the Dow's in a bear market. We see some correlation with Bitcoin and the Dow. We probably should check out the Dow. So let's have a look and see if the Dow's in a bear market. Has it dropped more than 20%? Let's check it out. S&P 500. So what I'm looking for here at the moment, we will check out the DJI, the Dow, but I just want to see, how far down we've come. We'll take out our measuring instrument and drop that, and we are now in just below 22%. So you could consider that bearish. So yeah, we are bearish on the S&P 500. Okay, so let's have a look at the Dow Jones and check that out now. So the Dow Jones, the industrial average, Did we just go past it? I think we did. There we go, DJI. You can see it's a massive hockey stick anyway, just like the S&P 500, and it looks quite, quite likely that we're not going to make this target up there. Let's see if it's bearish. Okay, let's take out our measuring tool and let's find the top, and we go down 18%. We're not bearish yet. We're not bearish yet in the DJI, but there is high potential that that could dip at any one point in time. If the Dixie starts pushing up higher, if the 10-year yield starts pushing up higher, I think we are going to go into bearish territory with the Dow Jones, which means implosion time. I think this is the last one, so watch this space. So yeah, for me, this is my opinion. I know plenty of other traders out there have a similar opinion, but I think due to the instability in the debt market, it's very sporadic. It's making these big moves, and it's showing instability. Are we going to get the same effect as what we did back in 2008-9? When the bottom fell out of the housing market. If you look at the 10-year yield, that is an indicator for mortgage rates, of which mortgage banks set their mortgage rates. The 10-year yield. What's happening with the 10-year yield? Something could happen there, and we could get this drop. So yeah, absolutely, the housing market has been ramping and roaring over here. Property prices are up. Mortgage rates have come up over time. So yeah, we could absolutely be looking at the bottom falling out of the housing market when people are unable to afford things. Because if the debt market implodes, then it's likely that money is going to start moving in to commodities, things that people need. The price is going to go up, like fuel. We need fuel, so we can see oil making a big jump. We need water, we need food. So there's potential that that's going to make a massive jump. Because it's in demand, right? Precious metal, people want to store their wealth, their money. That will be coming into a massive demand. There's a limited supply. Cryptocurrencies that have limited supplies, that have a utility, that can move value from A to B quickly. So yeah, I think there is high potential that if things keep going the way they are, with the bullishness of the 10-year yield, the bonds, the debt market ramping and roaring, and it keeps moving up, then absolutely it will implode. And I think eventually what will happen is money will start moving into commodities. So yeah. But anyway, I'm Nathan of Zion, aka Nathan. Don't forget to smash the Zioncoin like and subscribe. Smash the Zioncoin to subscribe, and check out the next video. And I'll see you in the next one. Take care now.